Well, welcome everyone, and thanks for joining us for another session in our monthly small business webinar series. A couple of reminders before we get started with today's presentations. The website where you logged in today also has a past recordings link on the side, so if you want to go back and review any of the ones we've done for the past, there's probably about 4 or 5 years worth of recordings there, and any handouts that were available at those sessions are typically posted right below the recording link as well. So if you want to share one or go back and review one you maybe forgot something about, those are there for you whenever you want to do that. We're still finalizing our title for next month, but March 7th at 11, which will be our next small business webinar series. I think we're going to have a session on insurance for the key person in small businesses. So still finalizing some details, but we'll get that out to you through our normal channels here in the next hopefully week or so. We'll get that nailed down and finalized. So with that, today we're always welcome to send in questions via the chat window, and the presenters today have also said they're happy to take voice questions at any point during the presentation as well. We will certainly stop at the end of the session and give everyone an opportunity if they have questions they want to ask via voice. You're welcome to do that. And if you don't want folks to know you're asking the question, if you send your chat message just to me, I'll just say that we've had a question come in and I'll read it to our presenters. So that's your choice on how you want to engage with us today in terms of questions. So with that, I guess let me thank our sponsors first, and then we'll get started with today's session. So the sponsors for the series, the Small Business Development Center Network, Montana Department of Commerce, Small Business Administration, my employer, Montana State University Extension, and the Montana Economic Developers Association. And then we get some extra support from Grow Great Falls Economic Development and the University of Montana as well. So with that, today's session is going to be all about an overview to starting up your own business, and we have two presenters with us today. Both are with Big Sky Economic Development. First, we have Kayla Vokral, and then Lorene Hintz are going to be our presenters. So I am going to turn it over to Kayla and Lorene, and I'll just watch for questions coming in.
Perfect. Thanks so much, Joel. We really appreciate you guys having us today. I'm going to go ahead and share my screen here so we can kind of go through the presentation that we have put together. So give me just a second as I get that going here. It's without a doubt every time. Doesn't go exactly as you planned it.
Slides look good.
Oh, great. So like Joel said, Lorene and I work for Big Sky Economic Development out of Billings, Montana. What we do is we help small businesses, and so if anyone works with Rich, very, very similar work that we do. So we'll kind of run through our presentation here. So here's some lovely photos of us, just in case we didn't announce who we were in the beginning. So again, I'm a SBDC training manager and business advisor, and then Lorene is our regional director for the 9 counties that we cover. So to give you an idea about the coverage in the state of Montana, Lorene and I cover that kind of pink section, and then you can kind of, decipher wherever you are in the state, where you might fall. And there is a center there that is available to help you. And so what the small business development centers do across the state is we help provide business plan assistance, financial projection assistance, market research, industry data, low cost, no cost trainings. And we do one-on-one counseling with businesses for their specific business needs. And we're able to do all of that because of how we're funded. So we're funded by the Small Business Administration, the Montana Department of Commerce, and then local hosts, which in our case is Big Sky Economic Development. But in other areas, it could be U of M, it could be colleges, so just kind of wherever those hosts kind of hold them. We always like to touch on this topic when we're going through our workshop here, just because if there's any veterans or military spouses on the call, there are some different resources that are available to you through the Veterans Business Outreach Center. And if you are and you do want to get connected, you can just let Joel know or Rich know, or even Lorene and I know, and we would be happy to get you connected to Rick, who covers our state, and connect you with those resources that are available to you. So along with some of the assistance that the SBDC helps with is some of the tools in our toolbox is Vertical IQ is a great industry research platform that we're able to pull different types of reports. And I'm actually just going to skip through. I'll go through this really quick. We'll get more in depth on each of these slides, but Vertical IQ, Montana Site Selector is a powerful tool that the state actually puts together, and we're able to pull data from specific areas of Montana. Traffic reports, value proposition, and business model canvases, just to kind of get a better understanding of what problem you're solving. So we'll kind of go through that here in a second. Throughout our presentation, we kind of made just a very common theme of downtown bakery and coffee shop, which kind of helps us narrow down some of the topics that we talk about. So when you're starting a business, there's steps that you have to take in order to start a business. And what we did is on rock31.org in the FAQ section, there's this first drop-down link here. I don't know if you can see my mouse, but just literally hit that plus symbol and it'll drop you down into the top. I think there's 9 steps on there to start your business. So this is the technical steps to establish your business in the state of Montana. So what do I mean by that? Okay, 10. So there's 10 steps, sorry. But the first is, checking to see if somebody's taken your name already. If you're wanting to open City Brew, it's probably taken already, and you should choose a different name for your coffee shop. But maybe you want to do Early Riser or something, and you want to say, hey, is that taken here in the state of Montana? You can just do a check on your name. We always recommend double checking with your attorney and accountant on the entity selection that you have. The big thing about entity selection, and we have a section a little bit later in the presentation that talks about it a little bit more in depth, is you can choose something now and then switch it later on, let's say as you get bigger, or maybe you bring on a partner and your situation changes, and so you want to change it up a little bit. You can do that, but we always recommend consulting your attorney and especially your accountant to make sure that you're just choosing the right entity for yourself. The next step would be to actually go on and register with the Secretary of State. And then depending on what entity you're choosing, there's different steps that goes along with that. So we'll go ahead. We're actually revamping this a little bit to make it a little bit simpler and easier for you. And so just keep an eye out on that rock31.org in the FAQ area to see how we get that formatted for you. But there's different steps for every entity that you choose on how to officially get your entity set up. So then step 4 would be applying for your federal ID number. All of these links on the website do bring you to the appropriate areas. If you are filing for your federal ID number or EIN number, and someone is trying to charge you money for it, don't do it. It is free, and there are sites out there that do charge you for it. And so we always just tell people, if especially just follow this link because it's going to take you to the right site, and you don't have to worry about potentially being scammed. The other thing I will mention that we don't have on here is that one thing that happens too is sometimes when you go on and register your name with the Secretary of State, people see that name come up and then they go and they buy up all of your URLs. So we always recommend too is, hey, if you've got your idea in your mind, just go ahead and steal that that domain, or not steal, but purchase that domain. So you get your, earlyriser.org or earlyriser.com. Because sometimes what happens is then they go in and register it, and then they turn around and try to charge you more money for it. So that's something just to be aware of. Step 5 is applying for your a professional license. Now with that, these typically are for occupations and business industries that require licensing, and that would be like cosmetologists, doctors, dentists, dental hygienists. Anything that you have to take board exams for is typically where you have to go ahead and get a professional license. And so if you're just owning a retail shop, you don't need a professional license to do that. Step 6 is inquire if you need an inspection or permit. So if you're doing a food business, or you have a salon, tattoo parlor, piercing parlor, anything like that, there are inspections and permits that come along with those. So just making sure that you're checking to make sure that you're going to be covered completely. Obviously, this one brings you to the link for Billings business license. But any one of your SBDC advisors in your area will be able to get you the link to the correct business license for your city. And so you can just reach out to them and they'll make sure that you get it. Now, once you've walked through these steps, you have the information that you need to go ahead and set up a business bank account, and then move forward with purchasing your general liability insurance, and any other business insurance that you might need, which it sounds like there's going to be a really great workshop on next month. What kind of insurance you need as a business owner. So that's a perfect tie-in for you there, Joel. And then again, work with your insurance agent and accountant to see if you need to get workers' compensation or an independent contractor's exemption certificate. And we'll kind of touch on those a little bit later in the workshop as well. So earlier, I showed you a slide on some of the tools that we provide here at the SBDC. So as you're going through and starting your business, especially if you're looking for financing, you do have to have a business plan. And in that business plan, you have to provide what kind of what is your industry doing? And so this is where those vertical IQ reports really come in handy. And any one of your SBDC advisors can pull these reports for you. One of the things we really like to show people, especially in this, is when there's a coffee shop, and the reason why we actually did this is because it was very intriguing to us. So shops, a lot of people think that the biggest revenue source is actually from the beverages that they sell. But when we look at the industry report, most of the revenues, I think it equates to, when you calculate food on premise and off premise consumption, and drive through food, I think it's about 60% of the revenues is food in the coffee shop. And so if you think about it as the 100% pie, 60% of that is actually just from food, and then the rest is from beverages. And so if you're going to start a coffee shop and you're not going to supply food, you're missing out on a huge revenue stream for your business. And so this is also really helpful to you to understand, what things could I potentially be missing out on in my business? What are some of my big revenue drivers in this industry? And then you can incorporate that into your business plans. So I mentioned the Montana Site Selector a little bit earlier. I really do love Montana Site Selector, and the big reason for that is because you can get some really great data, and you can pinpoint it pretty close down to what you're looking for. So in this case, we looked up, because we're keeping with that theme, downtown bakery and coffee shop, and we wanted to see what is Billings spending on food away from home. So in 2020, they spent $154 million, and in 2023, they spent $165 million on food away from home. So when you're sitting there and trying to decide, hey, is Billings going to be a great place for me to start a food business? I would say it would be, because you have a lot of people that are spending a lot of money on food outside of the home. And so this is just really helpful. I always like to mention this as well. You can I kind of call it creepy data. But with the Montana Site Selector, we had a vet that was looking at doing a vet practice in a certain area of town. So we were literally able to draw a polygon around that area of town. And then I could tell her how many families owned pets in that area. I could tell her how much they spent on food, dog or cat food in that area. I could tell them the kind of brands of cat and dog food that they had. I could tell them how much they spent on vet care. So we were really able to say, okay, this area actually has quite a large pet population. And so this would potentially be a really great spot for you to start a veterinarian practice. And it's kind of hard for me to see. So if you do have questions, feel free to shoot them to Joel or unmute yourself and ask them. So I'm just going to keep going because I don't necessarily see people. So one of the other great tools that we have access to is an annual daily traffic count. This is really great because if you have a business like a coffee shop that needs to be visible, you rely on impulse purchasing of somebody just driving down the street going, oh, I want to stop and get a coffee. Look, there's a coffee shop. I'm going to pull in. Then this is a great tool for you because you can say how many cars are actually driving past this certain spot. So we literally just did this, so I don't know if anyone's familiar with Billings, but we've got a big street called Shiloh. That's where Shields is with the Ferris wheel, and so that's usually where people seem to trigger. They go, "Oh, that's a pinpoint I can think of." But so on that intersection of Shiloh and King, we looked it up ironically for a coffee shop, and they had there was over 18,000 vehicles that drove past that spot on a daily basis. And then if we went up two main streets, so to Broadwater and Grand, there was only 11,000 cars that drove past that spot on a daily basis. So when you're comparing the two, the one spot that has way more traffic that comes through it has more visibility options, a lot more impulse purchasing options, and so that is where we would coach them on looking at. So obviously, there's a lot of things that go into it. There's certain businesses that are called a destination business that don't necessarily need to be visible, and so in this case, I would say like a mechanic. You're probably just going to look a mechanic up and then go to them versus going, oh my gosh, a mechanic. I'm going to pull in right now. Because that's not typically how that works. But if you're doing a coffee shop, retail, things like that, that would be where you would be. Somebody might go, oh, you know what? I do have some extra time. Let me pull in and see if I can find a new shirt, new shoes, things like that. So one of the other tools that we have as well is the value proposition. Now, this is a tool that you can work through on your own. Your SBDC advisors can help you work through this. But this is just really understanding what problem are you actually solving with your business and who are you solving it for? We've had clients spend a ton of money on solving a problem. And then when they are ready to launch, they realize nobody wants to buy their product. And then when they really sat down and kind of did some reflection, they realized that they were having that problem, and they just spent so much money developing a product. So I like to give the example of Uber. Uber saw a lot of pain points in traveling and then finding rides. And so a big part of that is, hey, when I get out of the airport in a town I'm unfamiliar with, is there going to be a cab? How long is it going to take for a cab to get here? Do I have cash to pay the cab driver? Especially maybe I'm going to a important meeting and I don't want to show up in a yellow cab. So they saw some pain points there. And what they did to fix it is, hey, You can see exactly where your ride is. You can see the type of vehicle that's going to be. You can see your driver, the rating of the driver. You can pay with your card. You can tip through your card. It took a lot of those pains out of the way. And so then that's how they figured out what their value proposition was. Another tool that we use too is the business model canvas. I like to say if you don't necessarily need financing, but you kind of want an idea of what your like a layout of your business, this is a great one page. It kind of takes the important pieces of what your business is and things you should be focused on. It puts it down on a piece of paper for you. This is a really great tool. And then the nice thing about this is all of these pieces get transferred into your business plan anyway. And so if you're, down the line, you're looking at getting financing, you already have big pieces figured out for yourself. So some things I like to point out is key partners. Some people get really confused on that, like what's a key partner? And so let's say that you have a bike rental company. A key partner for you might be your Chamber of Commerce. They might recommend that to visitors as they're coming through. That could be a key partner for you. If you've got bike races, that could be a key partner for you. If you do bike repair, getting connected to bike sales shops, things like that could be a key partner for you. Revenue streams, so any way that you make money could be a way. So in this case, like if you rented bikes, that would be a stream. If you repaired them, if you sold them, those would be all different ways. So kind of going through this and figuring out what each section is for you. And like I said, it's a good idea just to have it all laid out. So as you're making decisions in your business, you know the important pieces. And I'll throw it over to Lorene.
Okay, so I get to do the fun part with the financials. And so we want you to, when you're starting a business, to take a look at your pricing before you go and set your business up and just start pricing at it randomly. We want to make sure that you're going to make money. So we're just going to use Early Riser Coffee as an example. They're starting a business, and so they're said, you know what, we're gonna sell our coffee for $2 a cup. And so you need to think about, is this a competitive price? When you look at your competitors, is this going to be too high or too low? And then the sales volume, how many cups of coffee can you make per month? So here we put 3,200 cups, which would be around 700 cups a day or cups a week. And so can you make that many cups of coffee? But not only can you make that many cups of coffee, can you sell that many cups of coffee? Do you have that many people in your area that you can sell coffee to? So we want you to think about all those things. And then variable costs, those are the things that do vary depending on how much you sell. So your food costs, your cups, paper supplies. And so we look at that. We look at what the margin is. So if you're making $6,400 and your costs are $2,080, the gross margin is going to be, you're going to make $4,320. That's just with the cost of goods taken out. Then we take and look at all your fixed expenses, and we want you to take a look at those before you start your business so that you can know if your pricing is right and if you're going to make money. Those fixed costs are the things that we have listed: rent, utilities, insurance, marketing, fees, and then we even put some miscellaneous in there. Notice we really didn't even have any money for wages in there because you're running this by yourself and you're going to make what's left over. So by the time we have our fixed expenses, our net profit is zero. Did you make any money? No. But did you go in the hole? No, you broke even. So that's a good thing that you're breaking even, but nobody wants to go into business to break even. People want to go into business to make money. So we're on our next slide, we're going to look at one of the ways we could make a change. So all we did on this one is we didn't raise the price, we just raised the volume of how much we're going to make. So have to think about this. Do you have enough customers that are going to buy 4,000 cups of coffee in 1 month? And so that would be approximately 1,000 cups a week. And sometimes we'll break that down to a day. And do we have that many customers? Didn't change anything on our variable or our fixed. And we did make a profit of $1,080, which is about $36 daily on our break even. So what else can we do? That's a lot of work for not a lot. So now we're going to raise our cup of coffee by 25 cents. And so is this still competitive? Can you sell 133 cups of coffee a day? Do you have that many clients that are our customers that are in your area? What kind of traffic are you going to have? So we didn't change the volume this time. We just changed the price. But we also looked at the variable costs. Could we find some vendors that charge us less? And that's one thing that you really need to be checking all the time throughout your business. When prices go up for the things that are listed in your cost of goods, are there other vendors where you can get a better deal? So we're lowering our cost of goods. We have raised our volume. We've raised our price. And now we are making $6,600 after our cost of goods. And then with our total expenses taken out, we have a net profit of $2,280 a month. So we are making some money, and we've done it and figured it out before we started our business. Because the last thing you want to do is start up your business and 2 weeks later raise all your prices. Number one, people don't like it. Number two, it costs you money to do that if you've got your marketing material all done and your menus made and things like that. So we want to help you work through all of your costs and your pricing and what you should price your things at. We want to do that before you go into business. Okay, I'm ready for the next slide. So when you get all that figured out and then you're going to go to the bank, what do lenders typically look at, and why are they looking for that? The reason they want a business plan is they want to know that you have it all figured out in your mind and that you've got it written down. They want the pricing done. They're mostly, they look at the financials a lot, and then they look at how are you going to run your business? Who's going to keep track of your books? Who's going to keep track of your income and your expenses? And that's really important to keep track of that on at least a weekly basis to see where you're spending your money and how much money's coming in, and do you have money in the bank account? All those things are really important. The bank also looks for collateral. So if you're going to borrow money, they're going to want something that backs up what you're doing. Kayla's jumping ahead.
Hold on, I'm so sorry.
Are you having a technical difficulty?
Into the next slide. Sorry, hold on 1 second. I'll get back there. Oh my goodness.
I think she got bored with me and just jumped ahead.
Okay. I'm so sorry. I'm going to reshare here.
This might be a good chance. We had 2 questions come in, so maybe I'll throw those out to you now while we're getting our slides back. So the first one is, what's the number one challenge or mistake that you see with clients that have come to you?
Coming to us after they've started their business and they're already having some big problems, and it's kind of like sometimes too late to fix them.
Yeah, that's a great question.
Yeah. Or another thing would be is going to borrow money and not borrowing enough.
Okay.
Yeah, that would be another one that was the one I was going to say, is that they come to us after they've received financing, and they didn't receive enough, and now their bank does not want to give them anymore. And so then it's, what other option do I have? And unfortunately at that time, you know, depending on the equity into their business, they may not have the ability to take on more debt. And so how, you know, then it's really starting to think through some of those things. So ultimately our thing is just talk to your SBDC advisor like right from the start and then keep a constant contact with them.
Well, you know, that's a good tie-in, and you may have already answered it, but I'll give you a chance to just expand. The other question, very related, I think, to the first is, when is the right time to come to you all to get help?
Yeah, I would say, how I always tell people is we help for every stage in your business journey. And so we're here from the very beginning until you decide to sell. And then if you want to start a new one, connect with us again. So that's what I always say. And, you know, we're not just here for the start. We're not just here when things are bad. We're here for every step in between. You know, we get emails from clients that we haven't talked to in 2 years, and they'll think of a question and they'll just shoot us an email in the middle of the night, and you know, we just respond back or get them connected with the resources that they need. And so yeah, if that helps answer that question. And I don't know if Lorene and Rich have a different answer or want to add on.
No, that's true. It's never too early. It's never too late. We always try to help you no matter where you're at. But financing is really important. And like Kayla said, if you get financing and you haven't gotten enough, and you've used all your collateral, then it's hard to get more. Then people start using credit cards and all kind of crazy things, and then they get themselves into big trouble.
They take on an investor and they didn't know what they were doing and ended up selling a piece of their business, and now the investor wants to be more a part of their business than they anticipated. And so we really try to coach on not making reactionary decisions and making strategic decisions for your business. And so yeah.
All right, thanks. That's the only questions we've got so far.
Those were great questions. Thanks, everyone. Okay. I have fixed my screen, hopefully.
Okay, I'll continue on, and then we'll have a fun little video to watch. The injection, that's what does a bank usually want down? A lot of people come to us and they don't have any money, but the bank typically wants you to put some of your own money in. And the reason that is they want buy-in. They don't want you to borrow it all. If you borrow all the money and things go south, it's really easy to just walk away. The bank does not want your business. They don't want your building. They don't want your inventory. They just want you to make your payments. And so the reason they have you put money in is because it's easier. It's hard to walk away if you put in your own money, and you'll work harder at your business to make it work. Good credit score is important. They'll want financial projections, and we can help you with those. A lot of times that's the big thing, that people just get the deer in the headlight look because they're like, I have no idea what I'm supposed to do. And we have a very good spreadsheet, and we love working with those, and we can help you with those. Personal tax returns, they just want to know how you do business in the past. And then personal and basic business info is just some things that the bank will require. Okay.
Now, Joel, is there a special way to share sound?
Yes. If you want to stop sharing and then click share again, and you can choose optimize for audio.
Okay.
Or for motion and video, I'm sorry, and then try it, and I think it'll work then.
The computer audio. Okay, perfect. Okay.
I think we'll get it then.
And if Joel, you can just give me a thumbs up, tell me if you can hear it.
I am not hearing it.
Well, Rich, you're hearing it?
Yeah, you can hear it. There's really not any speaking yet.
Okay.
I can hear the markers.
Most young companies need money, which may or may not come as a big surprise, but they do. The number one source they get money from is from their own savings, whether it's a few $100s or even thousands of dollars. That's what we
Can you
tend to
hear her
tap
now,
first.
Rich?
And a lot of companies don't get money from any other place. They get money from their own savings, and then after that, they're lucky enough to be cash flow positive. They're profitable. So we talk a lot as if all companies require all sorts of external capital, and the reality is that more than half of young companies get all their funding from a combination of founder savings and then cash flow from the business, and we're out of here. Next up on the list is another one that catches, I think, people by surprise, and that's credit cards. Almost every young company you can think of, to one degree or another, was funded on credit cards. And it is the single largest source of capital for young companies after founder savings. And then the next place where they tend to get money is from friends and family. After I've tapped out my credit card and I've used up all my savings, I turn to people I know and say, hey, will you help me? And that's the third biggest source of capital. And then the next place is banks. And the banks are a totally weird situation because with banks, they get a lot of attention, but they actually fund very, very few young companies. But it's not their fault. You have to think about the way bank lending works and how shareholders want banks to lend. They want them to lend money against secured assets. And young companies don't have any security. They have nothing to secure it against. And the joke in the industry is you can get all the bank funding you want as a startup as long as you don't need it. And then the last piece is venture capitalists. They get the lion's share of the attention, which in some ways is warranted. You know, your Googles and Apples and FedExes and many others all have venture capital money inside of them. But the reality is, and this is from Kaufman Research, less than 20% of the fastest growing companies in the United States took any venture money. And that's not because the VCs wouldn't give it to them. It's because they didn't want it or didn't need it, because they had all those other sources. I don't need money, and I certainly don't need money on these terms. Because, venture capitalists, unlike banks, they don't lend against secured assets. They give you money in exchange for shares. So they take some of your company away. So my answer is if you don't need it, definitely don't get it. There's no question the venture industry has become staid. The irony is it's intended to fund disruption, and yet it's an industry that had become complacent. And interestingly, over the last 5 or 6 years, we've seen the emergence of other mechanisms for funding, like AngelList, like these kinds of peer-to-peer funding sources, as people increasingly provide capital in smaller amounts, but more people doing it directly. Having said all of that, though, venture capitalists are hugely important for those young companies that don't have access to bank money, but are growth companies. They have the prospect of being a $5 million or a $10 million company in a couple of years, and they need that growth capital to get there quickly. So it's a race. And the way you play the race is by getting money from people like venture capitalists who give you the money so you can compete with other people who are racing as fast as you are. If you can run a company off cash flow and some combination of credit card, own savings, and friends and family, Bob's your uncle, run, keep all the equity, because, there's no better thing than being in full control of your own destiny.
Okay. We like to show that video because it kind of just breaks out a little bit of the financing abilities of small businesses. We used to show this chart, and this chart was kind of sad, and it showed that only 1% of businesses actually get traditional financing. And we felt that kind of showed it a little bit better, as most businesses are bootstrapping their business off of their savings and credit cards. Now, we're not recommending going ahead and racking up a whole bunch of credit card debt, but that's just how some of these businesses are getting started. And so we also don't recommend taking all of grandma's money. It makes very awkward Thanksgiving dinners, especially when grandma moves back in with your parents because she can no longer afford to live on her own. So just be mindful when you're taking loans from family and friends. Also, make sure that you're getting appropriate things in writing. One, it holds you accountable, and it also sets the expectations of what that loan from family and friends is. And so it kind of keeps everybody in a healthy world versus just taking money and then there's no repayment terms.
Or accountability.
Yes, accountability. Yes. We just see that sometimes, and so we always say, just kind of be mindful of taking loans from people. One of the other things that's a possibility, and it's not touched on that video we just listened to, is called crowdfunding. I'm sure you guys have seen a GoFundMe site our link on somebody's Facebook post about something. But in the business world, there's crowdfunding platforms, and some of the most popular ones are Kickstarter and Indiegogo. Now, the reason why we wanted to bring this to your attention is some businesses actually really thrive on Kickstarter campaigns, and so or crowdfunding campaigns. And so what we like to say is it's not donations more as pre-sales. You have tier levels of what people are pre-purchasing from you, in the sense that once you get going, you fulfill their orders. And so there's pluses and minuses to each one. Kickstarter is great. It's got a huge following, and so you have a lot more visibility with that one. The only drawback with Kickstarter for us is that if you have at your timeline, you set, and I'm going to show you an example on the next slide, but let's say you set, and maybe I'll just go to the next slide and then I can just show you so it can kind of make more sense. But Art House Cinema and Pub here in downtown Billings did a Kickstarter campaign for theirs. They actually did an Indiegogo campaign. But the big thing you can kind of see is they had a goal of $30,000. And I believe they had about 30 days to raise that. And on Kickstarter, if you don't reach your goal and your allotted days that you've set for that goal, you don't get any of it. But like the plus with Kickstarter is you actually have a lot more visibility. On Indiegogo, if you don't reach your campaign goal in your allotted days, you still receive whatever money that you did raise. So that's kind of one of the bigger differences, but a little bit smaller of an audience. So, there's big things with that. Like I said, it's like tiered. So what Art House Cinema and Pub did is, maybe you spent $200 and you got, 2 free tickets to the movie for a year, to the movies for the year. If you did, let's say you donated $1,000, maybe you got a private party for 10 of your friends. And then maybe you pre-purchased, maybe it's $5,000 or $10,000. You get a special gold card, and you get free beer and wine and popcorn for life. So it just depends on the tier that you choose, but that's kind of how that works. So it's a little bit harder with service industries when you don't have a tangible product. This works really well for products that you can ship, because you can get people all over. So in Art House Cinema and Pub's case, their drawback is their target market is typically people here around in and around Billings, versus if I just had like a tangible product. Let's say I was selling a jam, I could ship that all over the country, and so I have a little bit broader of an audience.
Okay, one of the big questions we always get is what's the right entity for my company? How should I start? A sole proprietor can be 2 people with joint ownership. That is the easiest and the simplest way to start. You don't have to file really any papers. You register with the Secretary of State. And when you file your taxes, you'll be filing a Schedule C with your taxes as a sole proprietor. The most common and the most popular in Montana seems to be a limited liability company. And the reason and that way that's different from a sole proprietor is it separates your personal property from your business property. And so here's a really good little structure that shows that. And so what happens if someone sues your company and you're a limited liability company, they can't sue your personal property like your home and your personal automobiles. They're separated from your company. And that's why it's the most popular. It's pretty easy to set up. And really, in either case, sole proprietor or limited liability, the biggest thing is to have enough insurance so that if somebody does sue you either way, that your company is covered with insurance for liability. So like $1 million liability umbrella might be a good way to go with that. We always say talk to your accountant before you set up your company. And so you need to talk to your accountant before you register it with the Secretary of State, because you have to also register how you're setting your company up. Is it going to be a sole proprietor, LLC? Is it going to be a partnership? Is it going to be, how are you going to do that? Partnerships are really quite tricky, and people like to set them up, and they are partners like 50-50 ownership. A thing with a partnership is if somebody decides that they're not happy with the business and their name is on the bank account, and they clean out the bank account and they walk away out of town, the other partner is left holding the bag, and they are left with all the debt. And people say, this is never going to happen to me, and it happens many times. And so I kind of discourage partnerships, but still, we still say, talk to your accountant about what is best for your company. The accountant looks at what your tax liabilities are going to be, and how that should flow through your taxes, and what that's going to be. And so here's a little, this is a great little comparison table for you to look at to see what's good, what's bad, and help you make those decisions. We're really not here to tell you what to do. We're here to guide you to make the best decision for your company. And but we're not accountants, we're not attorneys, and we never refer to ourselves as that.
That's my disclaimer. As soon as I start getting into the weeds of anything, I'm like, well, I'm going to tell you this. This is just my opinion here on out.
Yeah.
But yeah, so we aren't attorneys or accountants. So, you know, we can give you advice on what we would do. But ultimately at the end, it is a conversation that we would refer you to have with your accountant on what is the best entity for you on a tax standpoint.
And I guess we're ready for the next slide.
Yes, I'm cooking. It's not going now. It always gets jammed up here for some reason. Let me stop sharing and reshare. Sorry, guys. Let's see if that does it. I think we only have 2 more slides, and that's just to touch on the independent contractor exemption form. So I don't know, Lorene, if you just want to start talking about that while I go ahead and get this loaded.
Okay, so independent contractor, we get a lot of questions about that all the time. Somebody's like, I have started my business and I don't want to pay withholding on my employees, so I just want to have them be independent contractors. And that's something that's really a tricky thing. So if you are an employer and you're hiring someone and you're telling them what to do, and you're telling them what hours to be there, and you're supplying them with the tools to do their trade, they are not an independent contractor. They are your employee, and then you have to pay withholding on that. And then another thing is, if you are an independent contractor and you're going on site and doing work for someone else, you have to make sure that you're not using their tools and they're not telling you when to be there, because then you are their employee. So there's a lot of good information online. We have the site right here that you need to look at. But if you are an independent contractor and you're working off site, you need to then have workers' comp on yourself, or you need to be exempt from workers' comp. You have to have one or the other. And so there is a independent contractor exemption form you can fill out, and that costs you $125 for 2 years. And there are some points you have to have that you need to send in documentation to the state that you are an independent contractor, and you can get that exemption for yourself. The other thing you need to think about is if you are a contractor and a roofer and you're on roofs and you could fall off and you're exempt from workers' comp. That means if you fall off and break both legs and both arms, you don't get any workers' comp. So maybe you want to be paying that on yourself rather than being exempt. So I would, before I decided what I was going to do, I would talk to my insurance agent and see how much workers' comp costs on your industry and how much you're going to have to be paying on workers' comp. So we just want people to be very thoughtful about what they choose. If you're an accountant and you don't, you're going to be exempt from it, you're probably going to get a paper cut. You're probably not going to, have a lot of risk. But if you're a roofer, you're going to have a lot of risk. So what do you want to do? We like you to think about those things before you just make that decision. Any questions on that?
Oh,
No questions so far.
Okay.
I have a
um,
quick question, or
okay.
quick comment on the independent contractor insurance stuff. What I get a lot from people who, especially in the construction trades, who are going to be independent contractor, they're going to exempt themselves, and they say, well, I don't need insurance because my wife works for the school district and we've got great health insurance. Like, well, not be true, but you cut your finger off on the job, you go to the ER, the first thing the doctor says is, how did this happen? He says, was at work, cut my finger off, and that's what he writes in the chart. At work, cut finger off. When that gets submitted to your personal health insurance claim, they're probably not going to pay it because they're going to see the chart that says at work. So it's going to be a work comp claim, and that's why you want to have work comp insurance. So
That's a good point,
Good
Rich.
point.
your personal health insurance is not going to be covering your work-related injuries. One quick question I'll throw out you gals too is I get all the time, so I think we should address it for financing, starting a business. What about grants?
Oh gosh, you know what? I totally took the slide out that we typically get prompts me to talk about grants. I'm so sorry. Gosh. Well, grants are great, but they do not typically qualify for startup businesses. Don't typically qualify for grants. They typically want you to be in business for 12 plus months, and grants aren't necessarily, they're not free money either, and so there's always requirements that you need to meet in order to get them. So it's just not a grant for working capital. It would be like a grant for training your employees, or a grant for cleaning up environmental problems. So there's always certain things, and then on top of it there's reporting requirements that occur after that. And so I always like to use this example. We had a client, and she was applying for a women business grant for $10,000. She had to write like a 3-page paper on why she felt she deserved this grant, moved on to the next round and had to do a virtual pitch, and then moved on to the next round and got invited to do a in-person pitch where she had to then fly to Florida and do this pitch, and she did not get it. She spent so much time and money on preparing for this grant that she didn't receive, when she could have actually been focusing on her business and probably making more than what that grant would have brought in. And so I always tell people, I'm like, it seems like really great, fast money, but it's not as fast as you think it is. There's a lot more that goes into it. And then at the end of the day, are you going to spend more time and money trying to get the grant when you could be spending that time and money on your own business?
It's pretty much a myth that there's free money for businesses. It just seems like we haven't found a lot of grants for businesses, so it's really sad. We have continued to look for a money tree and a wand, but we haven't found those either. And that's what would really help is a magic wand.
Sure. I had to ask because I know you probably get 12 questions a week about where the grant money is.
Yeah.
We do. Yeah, we have a slide and I took it out for the presentation today to kind of keep it under our time frame. And yeah, I totally forgot to talk about the grants, but yes, unfortunately, I mean, gosh, if there was, I would totally tell you all. Unfortunately, unless you have a cure for cancer, there's really not a grant out there for you to start your business. But 12 months down the line, depending on what you're looking to do, there could potentially be a grant down there. So stick it out for the first year and then let us know what help you need.
And that the grants we know of are mostly for training, not for working capital.
No, I don't know if there's any grant out there that will help you with working capital. There's always requirements of, what that it's for. So if you need working capital, we recommend like a line of credit. Does anybody have any questions? You can unmute yourself and ask. I will send this presentation over to Joel with the links active, and he can get that out to all of the attendees, Joel and Rich. And so, as you review the presentation, you can click on any of the links in there, and it will take you to where you need to go. And then if you have additional questions, you can always ask either one of them and they can get it to us, or I feel very confident in both of their skills, so I'm sure they could answer the question as well.
Well, let me thank both of our speakers and make one more pass here while I'm thanking them. If you have any final questions, now's the time to either put them in the chat window or unmute. So, but while giving you a second here, thanks Kayla and Lorene for taking the time and presenting. There was a lot of great information. And if anybody finds that magic wand store, I would like one on my desk as well. So I don't know where you get them, but I'll certainly take one. So any final questions? Well, any final thoughts then, Kayla or Lorene, to wrap things up today?
It was just great to be on today. Thank you guys so much. And I hope all of the businesses really thrive.
Thank you so much. Yeah, we just, we love helping businesses, and we just hope that our guidance will help them in the right direction.
All right. Well, thank you both. And thanks everyone for joining us. And we will be back on March 7th at 11 o'clock for our next session in this series. So have a great day, everyone.
Thanks. Bye.
Thank you. Bye.